Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to talk about oil and look at some of the ramifications in terms of inventory depletions and stuff like that. It's looking quite bullish. We're looking at a little bit of inflation, mainly oil in this one. And I'll also touch on the back half of this, the donations portfolio. I haven't added anything into it. I haven't had any donations recently, but I'll let everyone know what I own and how the portfolio is doing, give an update on there. So let's first dive into the oil section of this. Lots of cool stuff here. It says weekly API oil inventory report is out, including the SPR release of 3.9 million barrels. This is quite bullish report. Huge gasoline and diesel draws, more than offsetting the oil build. Even the SPR is excluded. So crude was up 7.7 million. Cushing was up 0.375 million. Gasoline was down 5 million. Distillates were down 4.96 million. And the SPR it took 3.9 million out of that. Looking at this zero hedge on why oil is back over $100 a barrel. Oil soars back over $100 as China lockdown fears fade. Ukraine tensions rise. At least that's what they were talking about in that article. The Daily Stoic, it says, external things are not the problem. It's your assessment of them. Marcus Aurelius. We've got U.S. inflation accelerating to 8.5% in March, a new 4-decade high as surging energy prices and higher food costs hit consumers. I do think that we are going to see higher and higher, or I should say, elevated high inflation. Because I don't see commodity prices going down this summer. I think we are going to remain high. I see home prices continuing higher, rent prices continuing higher, oil higher, natural gas higher, absolutely everything higher. It's really going to squeeze people. I really do think that. Looking over here, it says, replay alert, Mike Rothman of Cornerstone Oil and I chat oil inventories, OPEC spare capacity exhaustion, U.S. shale, financial and physical oil demand, the need for demand destruction via higher prices, and much more. Catch the 30-minute conversation. How high the inconvenient truths of oil supply and demand. He's a big oil bull. I do think that OPEC is running out of spare capacity. Things are going to get tight. I'll just say that. Scrolling down here, it says eye-catching shipping backlog with Shanghai lockdown and potential broader China lockdown. The queues of vessels carrying raw materials have jumped after Shanghai initiated a citywide lockdown at the end of last month to combat the medical event. And you could see all these ships just sitting there in queue. I thought that was kind of cool. That's kind of our shipping thesis on the channel there. Henry Hub hedged volumes and floors for 2022 by company. This is the hedged volume. So these companies have, let's say CRK and AR, have 50% of their production hedged at these prices here. This is the weighted average floor price. So AR is weighted 50% of theirs at $2.50 from previous hedges that they have. CRK is a little bit higher, but again, they still have 50% of their production unhedged. CNX is hurting a little bit, but I can tell you this, when the hedges roll off, these guys are going to be killing it when those hedges roll off. So CNX might be one that you might want to look at later, or I should say now, because the majority of their production is hedged. When this rolls off, they're going to be making a lot more money. So as these hedges roll off of these companies, the more money they'll get as they roll off, as natural gas is continuing to go higher, and it's over $6 a million cubic feet at this time. So they're going to make 3 times the amount of money of the, a little over 2.5 times the amount of money of this. Moving over here, we've got SandRidge Energy. This is the quarterly cash and debt. This looks very good. It's one of my holdings. These are the total long-term debt in kind of the light blue. The dark blue is their cash and equivalents. You can see where their cash and equivalents is going. It's going far higher. And I think this was at levels that were actually not that high in terms of where we have oil at today. So oil could be even higher than what this is projecting. So we've got some pretty crazy stuff going on with some of these companies in terms of cash flows, and their debt will be completely gone. This one says, I spend 3 days walking around Calgary, and let me tell you that my energy bullishness has been reinvigorated. And I'm going to kind of step through some of these. Expect a lot of new or accelerated buybacks this coming quarter, some decent dividend bumps, and a lot more certainty on return of capital plans, plus more than a couple SIB discussions as well, stock buyback plans and stuff like that. Many of these companies have had few or no in-person investor meetings in years. What is sentiment like? It kind of seems like money was falling out of their pockets and they are tripping on it. I'm making jokes, but these changes have happened so fast that they have not been able to revise their business plans fast enough as debt is evaporating sector-wide. And that's exactly what I was talking about with SM Energy and these high debt companies. Their debt is going to get inflated away through the price of oil. And that's why I was in those big, heavy debt companies. And this is all going to unwind as their cash flows go absolutely berserk with the price of oil. Every E&P I met with made aggressive, increasingly aggressive, or very aggressive commentary on dividends and buybacks. The recent move in gas prices, especially the strip, they're talking about natural gas, has major implications to cash flows over time. The 1 to 2 BCF per day of near-term U.S. LNG exports adds is very material in the context of service tightness and lack of takeaway capacity. Mergers and acquisitions seems less likely immediate term as the bid-ask spread has gapped out quickly as buyers want to pay 70 a barrel equivalent, while sellers want something closer to strip. Does this surprise anyone? That said, there's lots of asset packages on the market now. Expect these to transact soon, creating catalysts. Blueberry First Nation is not scaring the corporates. We should know that recent M&A, but they reiterated it, many of them calling it normal course of business. The rhetoric on producer discipline is very strong. Nobody talked about near-term growth, and many said it's very difficult given the total lack of service availability. The labor shortage is acute and worse than I expected. Can you really grow? That's pretty alarming if you think about it. We've got labor shortages and the energy service sector struggling to grow. Clearwater keeps getting bigger and better. Spur put out an update with significant step-outs making it bigger. Expect lots of news with quarters. How to play it, HWX, TVE, BTE, and the royalty companies. I had dinner with Roswell from HWX, and he is in a pretty good mood. Time. It's been a quarter of elevated commodity prices now. When you are trading at a 25% free cash flow yield, that means 6% per quarter. That's an incredible treadmill. Europeans are back. Paraphrasing. Europeans have a much greater sense of urgency when it comes to investing in energy related to North Americans. They're even asking for oil sands models. Yeah, this is going to get pretty crazy, I think. We've got this. I thought this was kind of funny here. This is Americans. This is Biden here. He goes, my plan is simple. We will use more corn and allow the sale of ethanol in the summer months to help offset the amount of oil needed to make gasoline during a food shortage. I just thought that was funny. It's true, but very funny at the same time. So that's what I've got for the oil, basically news this week. I'm gonna roll into our donations portfolio. So how's the donations portfolio doing? Remember, let me just step back in here real quick. I have not done a single trade in this portfolio. I've basically put some money into it when the chart patterns have broken to the upside and they were just sitting there. So I added some money in. I've just been riding this. I've traded absolutely nothing. Zero sells, guys, zero. So this is what the performance of the portfolio is doing, and we can go over some of the companies. Let me zoom in here real quick, make it kind of big for everyone. ACH, that is a poor performer at minus 25%. Why am I not selling it? Because I don't care. My plan is to diversify amongst the big winners. I know that aluminum's going to go crazy out in the future, and I wanted some position. Would I actually add into it? Maybe. Let's take a look. Here's ACH. It's got a little bit of a pullback here. We'll go to the dailies. It still has a little bit of selling pressure. I'm going to wait until this bottoms out. Maybe I'll add a little bit more depending on the donations that are given to the channel, if that looks good. But at this time, I'm just going to wait. AG up 13%, pretty good pick. BPT, this was somebody else's pick, doing a pretty good job, 17%. Good job for the person who donated for that. BTU, another person who donated, wanted it. Peabody Energy did a great pick, 54%, killing it. Kuora Mining up 7%. That was another one that he had picked. This was the same person. CDEV up 7%. That's one I picked. CTRM, that's our boy Castor. I picked that one, 10.5%. DNN, another one that I picked. This was somebody who donated and wanted it to go to uranium. So I threw it in DNN, 12.8. EXK up 15%, looking good. Fuel Cell, this is kind of a speculative renewable type play, or I should say a hydrogen play. Down 8%. Fortuna Silver Mines still doing well, 5%. I like that one a lot. HLX up 18%, doing well. Intrepid Potash killing it, 88%. That is one that I do like. LEU, it's down. I'm not going to do anything with it, guys. I'm just going to ride. MP Materials down a little bit. I still like it. It's still on top of its pattern. MTA down 11.8%. I still like where it's at. It's still above support. Noble Energy up 22%. Northern Oil and Gas 11%. NXE 15%. OII is flat. Well, Cisco Gold Royalties up a little bit. Platinum Group Metals is down a little bit from where I bought it. Pump getting pumped up 16%. Rig 18%. SandRidge 15%. Seeds down a little bit. Again, it's not a bad looking chart. SM Energy up 9%. Sol down a little bit. Tidewater up 40%. UEC 25%. That one's looking good. That's about to break. That's all-time highs, I think. UROY up 5%. UUU up 12%. And Wheaton Precious Metals up 11%. The entire portfolio of this here is up 8.21%. It's doing quite well. And then we've got COPX, which is up 3.6% for the total gain. So we're somewhere real close to about 8%, because this is a very small amount. This is a lot larger amount. We're about 8% on the portfolio. And this portfolio has been started about 1 month ago. So that's what I've got. This is our commodities portfolio, and that's the update for the portfolio there, up 8%. If you guys want to donate to the portfolio, it's in the link below. What I'm going to do is, if I get a donation, I'll update it with something that I buy, and then I'll update it real time, so you guys know what I'm purchasing. These are companies that I'm limited to. There's no OTC. I'm just putting them in companies that are NASDAQ, or New York Stock Exchange or American Stock Exchange. Any of those are what I'm kind of putting it into. So that's the update for the donations portfolio. Again, I think oil's going to be strong. We're probably going to break out to the upside at any point. I don't know when. I think very soon. And I'm positioned. This portfolio is positioned with energy service companies, exploration and production, oil and natural gas. We've got uranium in it. We've got some shipping companies. We've got some gold and silver companies as well. So that's what's in the portfolio for the most part. And I think we're going to be doing quite well with these companies. These are all more value-driven companies. A couple speculative, solar companies in there just to see how they're doing. And we'll see how they go. How they end up. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.